Hi class, as promised, I wanted to do an example of a statement of cash flows to help you out with your homework for chapter 2. So with this one, for exercise 2.11, it says during the month of October of the current year, Weller Company had the following transactions. Revenues of $14,400 were earned and received in cash. Bank loans of $3,600 are paid off. Equipment of $3,000 was purchased for cash. Expenses of $9,120 were paid. And additional shares of capital stock were sold for $9,000 cash. Assuming that the cash balance at the beginning of the month was $8,940, prepare a statement of cash flows that displays operating, investing, and financing activities and that reconciles the beginning and ending cash balances. Okay, so here we can go ahead and title this. So we have Weller Company. Let's go ahead and do a different color this time around. We have Weller Company. Statement of cash flows. Okay, and this is for the year ended, and we'll just say it's 2019. Okay. Okay. So we want to break this up between cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities. So we'll start with cash flows from operating activities. So basically, this is what cash came in and what cash came out due to just operating the business. And two main things that will always fall under this category would be revenues and expenses. So we have revenues. These are cash revenues, so we could also have just written out cash revenues. And that is $14,400 in cash that came in. So that's A. But then also expenses. But these are cash expenses, because we'll learn later on that not all expenses are necessarily in cash. But then remember, cash revenue, that's cash in, right? But cash expenses, that's cash out. So that means that's $9,120 that flowed out of the business. Okay. So if we want to go through that list, there's nothing else related to operations. So now we can subtotal that. We call that net cash provided by operating activities. We do $14,400 minus $9,120. That gives us net cash provided by operating activities of $5,280. All right, the next one is cash flows from investing activities. So these are any activities, any cash in or cash out related to investing back into the business, right? From the business's perspective. Okay, so when we look at the purchase of equipment for cash, that's an investment in an asset that's going to help the business, or at least promote the business's revenue generation, right? Or generating a profit at the end of the day. So purchases of assets is an example of an investing activity when that purchase is made in cash. Okay, so or even if a portion of that purchase was made in cash, that cash outflow would be considered a cash flow from investing activities. So we can label this as purchase of equipment, and we spent a total of $3,000 cash on that equipment. Okay, and nothing else on this list is considered a cash flow from investing activities, which I will explain when we do that third category. Okay, and no need to do a subtotal here. In Connect, it'll almost always ask you for a subtotal, but since there's only one, the net cash provided by investing activities is a negative $3,000. But let's just go ahead and do that anyways. So net cash provided by investing activities, that is and actually I should clarify that if it's a negative, we won't say provided by, but net cash used by, and that's really not the most technical definition, but just for purpose of understanding, net cash used by the investing activities, or spent, the net cash flowing out as a result is that negative 3,000. And lastly, we have our cash flows from financing activities. Okay, so the only things we don't have so far is the bank loan that's paid off and the additional shares of capital stock that was sold for $9,000 cash here. Okay, so let's start with the bank loan that was paid off, or bank loans paid off in the amount of $3,600. So why would we have taken out a loan in the first place? To finance the business, or a specific part of the business. So when you borrow that money initially, that cash inflow is considered to be a financing activity. But at the same time, other side of that coin, when I'm paying off those loans, that's also considered a financing activity because it's part of the same thing, right? The receipt of the loan and then paying off of the loan, the cash inflows and outflows are all considered financing activities. So we'll do paying off the loan. That's a cash outflow of $3,600. Oops, that's an extra zero there. And then lastly, we have these additional shares of capital stock that was sold for $9,000 cash. So why is this considered a financing activity? Shouldn't that be under investing activities? Well, you want to ask yourself, when we sell these shares of stock, are we the ones investing in the business, or are these people outside of the business investing in our business? Okay, when we sell shares of capital stock, the public is investing in our business, right? And how are we using that cash? We are using that cash to finance our business, right? So it's not us making the investment, it's other individuals making that investment, and then us using that cash to finance the business. So that's why when we say we sold additional shares, that is considered a $9,000 cash inflow due to a financing activity, because we're going to use that $9,000 to finance our business. And that is all that's on that list there. Let's scroll up a little bit. So net cash, in this case, the 9,000 is a little bit more than the negative 3,600, so it'll be net cash provided by financing activities. Okay, so let's see what that would be. So we have we'll do 9,000 minus 3,600. That is $5,400. So let's find the overall net change in cash. That's looking at each of these changes in cash for each category. So there was an overall increase in cash, overall cash inflow from operating activities of $5,280, but then we had $3,000 of cash used by investing activities, but then we also have $5,400 now coming in as a cash inflow due to financing activities. So the overall change in cash here, $7,680. That's just the change in cash. But then we want to go and look at, well, they told us that the cash balance at the beginning of the month was $8,940. So we start with beginning cash. Okay, beginning cash is $8,940. Well, if we know the beginning cash and how it changed, we can find the ending cash balance. If we started with $8,940 of cash to begin the month with, we now know that the net change in cash was a positive $7,680. So we add that change in cash, and that means that our ending cash balance should be $16,620. Okay, and that is how you set up a statement of cash flows based on different inflows and outflows and how to categorize them in their different categories, either it being operating, investing, or financing activity. So hopefully that helps, and good luck with the rest of Chapter 2.